The green bond market is growing into an important source of funding for companies that need to fund climate-friendly investments. With the Commission's proposal for a European green bond regulation, a voluntary and high-quality standard for green bonds will be established. The European Green Bond Standard will be available to all issuers that wish to raise funds on capital markets to finance their green investments while meeting sustainability requirements. Just in time with the political agreement on the regulation, we are therefore very pleased to welcome two very important participants of the Austrian green bond market. A warm welcome and thank you to Danijel Ficulovic of Erste Group Bank AG and Jörg Liesenfeld of Raiffeisen Bank International AG.
Let me ask you the first question. In your view, will the new European Green Bond Standard regulation have a positive effect on the green bond market in Europe?
I believe that the European Green Bond Standard could be an effective tool to reduce greenwashing and may therefore contribute to a more reliable legal protection and help the green bond market exclude brown companies, i.e. those with highly polluting industries, from issuing green bonds. The European Green Bond Standard will provide for a stronger supervision than it is currently the case. And authorities will have the power to ban companies from issuing green bonds if they fail to comply with the rules. In addition, voluntary internal ESG rules, which a variety of market participants such as RBI have already implemented, it is likely that the green bond standard will contribute to an increased confidence in the green bond market and will therefore have a potential positive effect.
The EU Green Bond Standard is certainly one of the biggest developments in the sustainable debt capital market in the last few years. The Green Bond Standard can be expected to bring new momentum to the green bond market. Market participants will for sure closely observe the first issuances under the new regime. However, due to a taxonomy alignment, we think there will be a tight initial offering and, at least for the time being, a coexistence with other established standards.
Could a price on carbon possibly be a big boost to the green bond market and green assets?
A carbon price would benefit the green bond market in different ways. Part of the profits would flow to governments instead of emission-intensive industries such as fossil energy companies. As a result, the market would be rather punishing than rewarding these companies. Investments in renewable energy would increase, and funds could be used to reduce other taxes and to achieve greater climate justice.
Internal carbon pricing is seen as a voluntary method for companies to measure the opportunity costs of emitting greenhouse gas emissions. With increasing carbon prices, business models of certain industries would potentially need to be reviewed, or sources for the funding of carbon lean productions would need to be collected. The leading contributor to greenhouse gas production is the power generation industry. If a price on carbon will lead the public and private sector to invest more financial resources into renewable energy, this could very well have a positive effect and be a further boost to the green bond market and green assets.
From your practice, what is the most promising sector in which proceeds from green bonds are invested?
This is hard to predict. Throughout the last few years, almost all industrial sectors and the financial industry were very keen on being eligible to issue green bonds. Financial institutions use the proceeds from green bonds for the financing of green loans. Companies are using the green proceeds in order to finance sustainable projects and achieve their ESG targets. The Austrian energy company Verbund AG was the first green bond issuer in a German-speaking country in 2014, and the financing of energy efficiency measures in hydropower plants as well as renewable energy projects in the wind power sector will remain the focus of energy providers even more due to the problems caused by the war in Ukraine. Last but not least, also sovereign and supranational issuers will enter or tap the green bond market in order to collect funds for the financing or refinancing of eligible green projects with positive environmental and/or climate benefits and thereby become more independent from mineral fuels.
A significant part of global emissions is generated in the real estate sector, both during construction and when buildings are used. Therefore, we place a special focus in our sustainable finance framework on green buildings, residential and commercial. But of course, other sectors such as renewable energy or transportation also play a key role. Also play a key role.